Bitcoin has firmly established itself as an asset class in its own right, distinct from traditional financial instruments like stocks, bonds, and even other commodities like gold. While cryptocurrencies have experienced periods of volatility, Bitcoin has consistently led the charge as the most valuable and influential digital asset. Today, we're witnessing yet another significant surge in Bitcoin's price, alongside other cryptocurrencies such as Ethereum and Solana. This begs the question, what is driving this surge in the crypto markets, and why is Bitcoin in particular experiencing such rapid growth? This article will delve into the key factors contributing to the recent price pump, providing a detailed explanation of the current trends and insights into what the future may hold for Bitcoin and the broader cryptocurrency space. Reasons for Bitcoin's price surge. Reason number 1, Donald Trump's popularity and pro-crypto stance. One of the primary reasons being cited for the current rally in Bitcoin's price is the political resurgence of Donald Trump. As the former US president gains traction in the polls for the upcoming election, his influence on the crypto market is becoming increasingly apparent. Trump's policies and statements during his presidency have shown a clear pro-business and pro-crypto sentiment, which makes investors optimistic about a potential second term. While Trump had expressed skepticism about Bitcoin during his time in office, his recent shift toward embracing cryptocurrencies is seen as a bullish signal for the industry. Crypto markets tend to respond well to political figures who endorse deregulation and innovation, and Trump's potential return to power has many investors feeling confident. Some have even speculated about Trump using Bitcoin to address the country's mounting national debt, currently at $35 trillion. Although such an idea might sound far-fetched, the notion of a government using Bitcoin as a financial tool reflects the growing acceptance of digital currencies as legitimate financial instruments. Market analyst Tom Lee, a highly respected voice in the investment world, has also attributed Bitcoin's rise to post-election clarity. He suggests that as political uncertainty fades, markets are likely to become more stable, encouraging investors to re-enter with greater confidence. Lee points out that despite the typical seasonal caution expected before elections, the market has demonstrated surprising resilience, a fact that has caught many by surprise. The significant amounts of cash that have been sitting on the sidelines for the past 2 years are now being deployed into assets like Bitcoin, as investors become more optimistic about the future. Moreover, with $6 trillion in cash currently parked outside the markets, October's strong performance indicates that investors are no longer waiting for a recession. Instead, they're taking advantage of Bitcoin's growing role as a safe haven asset, especially in uncertain economic times. Another key factor contributing to Bitcoin's surge is Vice President Kamala Harris's growing support for cryptocurrency regulation. While her stance on crypto has been less prominent than Trump's, her recent campaign statements have brought digital assets into the spotlight. Harris's campaign recently released a document outlining her opportunity agenda for Black men, in which she emphasizes the importance of protecting crypto investors, particularly those from historically marginalized communities. This is significant because more than 20% of Black men have either invested in or currently own cryptocurrencies. By vowing to implement a regulatory framework that protects these investors, Harris's platform appeals to a demographic that has been increasingly engaging with the crypto market. Her acknowledgement of the role that digital assets can play in broadening access to financial services is seen as a positive development for the entire industry. Harris's campaign statement is particularly important in light of ongoing calls from the crypto community for greater regulatory clarity. While some might argue that this is a calculated political move aimed at winning over specific constituencies, it nonetheless signals a growing acceptance of crypto within mainstream political discourse. Harris's campaign is tapping into the reality that cryptocurrencies offer new opportunities for wealth generation and financial inclusion, especially for communities that have traditionally been underserved by traditional banking systems. For the crypto industry, this is a win. Regulatory clarity has been one of the most sought-after goals for years, as it offers investors confidence that the market will continue to grow in a sustainable manner. With Harris making it clear that her administration would support pro-crypto policies, this has bolstered confidence in the market, attracting more investors. A third reason for the current crypto surge lies in the remarkable resilience of the overall market. In the past 2 years, there has been widespread concern about the possibility of a recession, particularly as global economies have grappled with inflation, supply chain disruptions, and geopolitical tensions. However, despite these challenges, both the stock and crypto markets have proven to be far more durable than anticipated. Many investors had been holding cash, waiting for a more opportune time to invest, fearing that the inverted yield curve would signal an impending recession. Yet, as we enter the fourth quarter of 2024, it is becoming increasingly clear that these fears may have been overblown. Corporate earnings reports have shown that businesses are managing well despite the broader economic challenges, further encouraging investment into riskier assets like cryptocurrencies. October has been an especially strong month for Bitcoin, with prices climbing to $65,000 and showing little sign of slowing down. Investors who had previously been hesitant to enter the market are now feeling more confident as they see the market absorb economic uncertainties with surprising stability. This influx of capital into both equities and cryptocurrencies is reflective of a broader trend where investors are betting on the future rather than dwelling on past fears. This resilience is also apparent in the daily market movements. Over the past month, there have been multiple days where major indices opened in the red, only to end the day significantly higher. This kind of volatility has been particularly advantageous for those invested in Bitcoin, which thrives in uncertain market conditions. The fact that Bitcoin has continued to outperform many traditional assets, even without a consistent stream of positive news, underscores its growing appeal as a long-term investment. While Bitcoin has often been associated with libertarian and conservative ideologies, there is growing bipartisan support for the digital asset. Ro Khanna, a progressive Democratic congressman, recently made headlines by voicing his strong support for Bitcoin and other cryptocurrencies. Khanna argues that opposing Bitcoin is akin to opposing technological advancements like artificial intelligence or the internet. He emphasizes that Bitcoin is a technology that can generate significant value and that it should be embraced, not resisted. This argument resonates with a growing number of lawmakers who see cryptocurrencies as a key component of the next wave of technological innovation. The United States has long been a hub for technological advancement, and many in the crypto community believe that the country must continue to lead in the digital asset space. Khanna's advocacy for thoughtful regulation, rather than outright opposition, reflects the shifting attitudes towards crypto within the Democratic Party. Khanna's stance is particularly important because it highlights the potential for Bitcoin and other digital assets to create jobs and generate wealth within the US. The fear of missing out on this wealth generation is palpable, especially as other countries like El Salvador and Switzerland are making bold moves to integrate Bitcoin into their economies. For the US to remain competitive on the global stage, politicians on both sides of the aisle will need to support policies that encourage innovation and investment in the crypto space. Finally, one of the most influential voices in the investment world, BlackRock CEO Larry Fink, has added to the bullish sentiment around Bitcoin. BlackRock, the world's largest asset manager, has increasingly shown interest in digital assets, and Fink's recent comments reflect the growing institutional acceptance of Bitcoin. During a recent earnings call, Fink was asked whether the outcome of the upcoming presidential election would impact the growth of cryptocurrencies. His response was clear. Regardless of who is in the White House, the utilization of digital assets is becoming a reality worldwide. Fink emphasized that BlackRock is already having conversations with institutions around the globe about how to incorporate digital assets into their portfolios. This level of institutional involvement is a significant factor in Bitcoin's rise. As more major financial institutions begin to view Bitcoin as an alternative asset class, akin to commodities like gold, it strengthens the case for Bitcoin's long-term viability. BlackRock's endorsement of Bitcoin as an asset class in its own right is particularly noteworthy because it signals that the world's most powerful investment firms are taking Bitcoin seriously. The fact that BlackRock is already discussing asset allocation strategies that include Bitcoin reflects a broader trend of institutional adoption. As these large-scale investors continue to enter the market, the demand for Bitcoin is expected to rise, pushing prices even higher. In conclusion, Bitcoin's current price surge is the result of a confluence of factors. From Donald Trump's pro-crypto stance and rising political influence to Kamala Harris's focus on creating a regulatory framework that protects crypto investors, political developments are playing a major role in shaping the market. At the same time, market resilience, increasing bipartisan support for crypto, and institutional backing from firms like BlackRock are driving more and more investors into the space. While short-term price fluctuations are always possible, the long-term outlook for Bitcoin is incredibly bullish. With Bitcoin currently trading at $65,000 and showing strong resistance, many analysts are predicting that we could see a $100,000 Bitcoin by the first quarter of 2025. As institutional adoption continues to grow and more political figures embrace the potential of digital assets, Bitcoin's role as a key player in the global financial system is becoming ever more apparent. For investors, this is a time to pay close attention to the market and stay informed on the latest developments. The next few months could be pivotal for Bitcoin, and those who remain engaged will be best positioned to take advantage